India has installed over 150 gigawatts of solar capacity, enough to power millions of homes, but almost none of it is truly Indian because the one layer that matters most, every manufacturer in India buys from China. Last week, Renew Energy broke the ground on a 54,000 crore facility in Anakapalli, Andhra Pradesh, India's first large-scale solar wafer factory. This is a big deal, and to understand why, you need to understand how a solar panel is actually built, because this move can challenge China's dominance in this sector. India has been announcing solar success for years. The government press releases show the government achieved renewable energy targets, but those numbers only tell you how much India has installed, not how much of it India actually controls. A solar panel is not just one solid thing, it's 4 layers stacked on top of each other, and you have to understand each one to see where the vulnerability is. The bottom layer is called polysilicon. This layer is purified silicon, the raw material everything else is built from. Think of it like flour in a bakery. Without it, nothing else moves. China produces around 94% of global polysilicon, and India produces almost none of it. Above that is the ingot and wafer layer. Polysilicon gets melted at extreme temperature and shaped into a solid cylindrical blocks called ingots. Those ingots then get sliced into paper-thin discs called wafers. Every solar panel ever manufactured started as one of these wafers. China controls over 95% of global wafer production. India has exactly one wafer producer, and every wafer it makes goes straight into its own factory. None of that reaches open market. For every other manufacturer in this country, the supply chain still runs through China. Above that sits the cell layer. Wafers go through a chemical process that gives them the ability to convert sunlight into electricity. India has some cell manufacturing, but every Indian cell factory runs on imported wafers. At the top is the module layer. Cells get assembled into finished panels you see on the rooftops and solar fields. This is where India has genuinely built something. The real capacity, over 172 gigawatts of installed module manufacturing. So India has built a strong roof on a foundation it doesn't own. Every gigawatt of domestic panel manufacturing runs on wafers bought from outside, which means one supply disruption or one trade decision and the entire pipeline stops. So the gap is real and it sits at one specific layer. The question is obvious. Indian industry knew this, government knew this. So why the wafer layer stayed empty for so long? The first reason is economics. Chinese wafer manufacturers operate at a scale India cannot come close today. They produce hundreds of gigawatts annually. Their cost per wafer is low enough that any Indian company trying to compete without government support would lose money from the first day of production. The numbers simply didn't work. But the bigger reason was a policy risk that had already happened once before. That actually kept private capital from moving. In 2019, the government launched something called the approved list of models and manufacturers. The idea was straightforward. If your solar product isn't on this government approved list, you cannot sell to any government-backed project in India. And because you have to physically manufacture in India to pass the audits by India's National Institute of Solar Energy, ALMM is effectively a market reserved for domestic producers. The government started with modules in 2019. Domestic module capacity scaled up. It worked. In 2025, it extended ALMM to cells. Domestic cell manufacturing followed. The framework was proving itself layer by layer. But in 2023, something happened that every investor in this space needs to know. The government suspended the ALMM module mandate entirely. Domestic supply had not kept pace with the projected targets. So rather than slow down the installation targets, government simply paused the protection. For the manufacturers who had invested capital depending on that policy, the floor disappeared. The mandate did come back in April 2024, but the damage was already done. That suspension is the reason private capital stayed cautious about the wafer layer. So what changed that made Renew Energy set up the facility now? The government announced ALMM List 3, extending the mandate to ingot and wafers, effective June 2028. From that date, every major solar project in India will require ALMM listed wafers. And this time, the government did something different. It built a condition into the mandate. It will only activate when at least 3 independent wafer facilities are operational in India, with a combined capacity of at least 15 gigawatts. The protection kicks in only after the supply exists. That structure directly addresses the 2023 problem. The mandate can't create a supply shortage because it won't be enforced until the supply is ready. It's the government pre-committing to protect a market it doesn't have yet, on the condition that someone creates it. Renew Energy read that signal and moved. Their 6 gigawatt facility in Anakapalli, Andhra Pradesh will be India's first large-scale greenfield wafer plant. Tata Power and Premier Energies have also announced their plans. The 2028 deadline created a race because the moment three independent facilities collectively hit 15 gigawatts, the market protection starts. Thanks for watching, and I'll see you on the next one.